And okay, looks like we are now live. Thanks for joining us, everybody. If you're watching live, it's Antonio with Covalent Careers in New Grad Optometry, of course. Welcome. And I'm here with Erik Ferjentsik of Visionary Practice Group. So excited to be here today. We're going to be talking about buying and selling optometry practices. We get questions about this stuff all the time. And quite honestly, you're much better off talking to and obviously working with real experts, some true experts, which is why we invited Erik to speak with us and share some information and answer any questions that you might have. So that being the case, you probably see the little chat box off to the side. You can type in questions. We'll answer them throughout this. Erik, why don't you tell us a little bit about your background in Visionary Practice Group and before we jump right into it?
Yeah, first off, thanks for having me. My name is Erik Ferjentsik, and I guess I'll start off. I got my MBA up in Massachusetts at Babson College. And that's Boston is also where I met my wife, Kelly. She's an optometrist. And that's what got me interested into the business side of optometry. After my MBA, it took me a while to convince her, but eventually I convinced her to buy a practice. I kind of spearheaded that goal of ours, and she came along for the ride. We purchased a practice in Connecticut, ran it, grew it, and then recently actually sold it last year. So I've been personally on the buyer side of the equation, on the seller side of the equation. And then in between, I've worked on hundreds of transactions with optometrists as a profession. So that's what kind of got me into the industry. Prior to that, I had some international experience in mergers and acquisitions, which applied to this industry, but primarily got interested because when I helped her buy her practice, there wasn't many service providers around, and the few that were around, I felt like there needed to be some better options, and that's how I got into this and started Visionary Practice Group.
Yeah, well, thanks for joining us. And once again, I know a lot of you will be watching this later on if you can't join us live, of course. But if you do have questions at that time, Erik, is there a place to contact you? What's the best contact email address or so on and so forth?
Yeah, so our website is visionarypracticegroup.com. My direct email is my first name, Erik, last initial F like Frank, at visionarypracticegroup.com. And you can give a call on this number, 877-268-8881. And my direct extension is 700.
All right, thank you. So we'll jump into it now, and I guess the first things first. When do you know when it's time to sell your practice, or when do you know when it's time to buy a practice? Let's just say, and how much time should you allot yourself for the process? So I guess in other words, how long does it take from making an offer on a practice to closing a deal?
Yeah, so I'll explain both sides. So we'll start with the sellers. Sellers need to plan for their retirement, and they need to consider risk factors. So in this industry, I don't know what it is with optometrists, but they tend to want to work in their later years more so than dentists or other healthcare professionals. And so I do see a lot of ODs working into their 70s. The problem is if you do that and you're not able to keep sales and production at consistent levels to the past, the buyers won't look back 5 years and say, oh, this is what it could have been. Banks won't look back 5 years and say, this is what it could have been. Their practice will be valued based on your 3 most recent years' sales and production. So it's important to plan accordingly. You don't want to sunset into retirement and then you lose a lot of value on your retirement plan through selling your practice. So what's best is to plan about a year to 2 years prior to your hard retirement date. Now, if you talk to a financial advisor, they're going to have you reallocate your portfolio of investments into safer investments as you age, right? So you might start off with risky stocks and different investments that are more risky. And as you get older, they'll have you switch over into bonds and annuities, things that are safer. Well, your practice is an asset that's part of your portfolio that you have to consider. So, and it is technically a risky asset. Things can happen. You can get sick. You can lose the ability to perform at the rates that you used to. There's macroeconomic factors. We could go into a recession. A major company that employs patients in the area could move to a different area, and suddenly a big portion of your patient base could be gone. Hurricane could happen. Anything could happen. So you want to protect that asset so that you can sell it and use that as part of your retirement plan. So shifting that into a safer investment by selling it and then reinvesting in something that's more fitting to your profile at the time is the best bet. And then if you still want to work for a couple more years after, there are options for you to do that as long as you're outside of the competitive radius that is stated in the agreement. And even within that radius, you can be sometimes allowed to work at an ophthalmology practice or maybe the VA, something like that. So you want to plan a date that's normal, like 63 to 65 years old. That should be your date or your age that you want to retire. Contact your broker within a year or two of that expected date for retirement. So that's on the seller side. Go ahead. Did you want to ask me?
No. Why don't you talk about the buyer side, and then I've got a follow-up question for you about the seller side.
Sure. Yeah. Okay. So buyers are going to be restricted by the limitations mainly for them to get approved for financing. So the basic restrictions are going to be 2 years licensed, most likely will be the minimum, or 1 year licensed and 1 year residency. Depending on the size of the practice, larger practices, you may have to be licensed for 3 or 4 years, but that's primarily the time restriction. In my opinion, the earlier the better for an optometry buyer. So don't wait too long. There's great opportunities out there, and it's almost always better to buy than it is to continue working from a bottom line income standpoint. You should be able to make more as a practice owner than you are as an employed OD. You also want to plan around your family. A lot of younger buyers want to buy in the metro area, but then when they have families later, they want to live in the suburbs. And if they do that, it's hard to commute into the city where their practice is. So you kind of want to plan around, where you envision you and your family settling. One other timing element is interest rates. Interest rates right now are relatively low. So it's a good time to buy. If you wait, years later, interest rates could be higher, and then you're going to pay more for the practice that you're buying in interest payments to the bank.
Right. Can you still hear me, Eric? I think we lost your audio here.
Oh yeah, I can still hear you.
Okay, I can hear you now. Yeah. So
okay.
Why don't you repeat that last thing you just said? I saw your mouth moving, but I didn't hear anything.
Oh, okay. Yeah, it was about interest rates. I was saying interest rates now are quite low, so it's a good time to buy. If in a few years from now or a few months, if rates go up, it's going to be, your interest payments are going to be that much more expensive. So you can't control interest rates, but some of those factors you might want to consider. If you're thinking about waiting a few years, but you meet the minimum requirements to get a loan now, you might want to move quicker than you think.
Got it. Perfect. So let's jump back to the seller side real quick, and let's approach this from as if you were going to sell your practice. What are some of the most important administrative things that you need to get in order to sell your practice, and what should you be prepared to furnish a potential buyer? And once again, what does that timeline look like? If you've got to show certain, accounting statements, is it, should you be getting ready for that a year in advance, etc.? Yeah,
great question. All right, so as early as possible, and I can't stress how important this is, you have to keep your records, so retain all of your records, and you have to keep a level of itemization that is going to be intuitive for the buyers to receive that information, for the banks to process it and underwrite a loan, and for the appraiser to be able to appraise the practice. So the one thing that I commonly see is the lack of itemization in expenses. most people do bookkeeping now through QuickBooks, either in the office or they have a bookkeeper do it, and then they'll pass those financials on to the accountant. I'll give you an example. For instance, telephone expense is a good one. Often business owners will have a telephone expense at the office. They'll have their personal cell phone expense through the business. They may have their home phone and internet also expense through the business. And if they put all of those in under just the category telephone expense in their bookkeeping, we won't be able to unravel which of those expenses are actually for the business telephone and which are discretionary, like the personal cell phone and the home phone, which are not fundamental to the continued operations of the business. And as the seller, you should get credit for those because they're not really business expenses. So for me as the appraiser and for the bank and the buyer, for them to acknowledge that, we need to be able to separate those expenses. Asking you to go back and find Verizon statements from 3 years ago is a pain in the butt. So if you have that level of itemization from the get-go, it won't be a problem. Okay, and that goes for other things like your insurances. Most people think that their business insurances are all business expenses, but your life, disability, even business overhead insurance are not actually fundamental business expenses. So we can give you credit for those, and that will improve the value of the practice as long as we can locate them. Other things that I see are the mismanagement of asset recording. So when you buy a piece of equipment at your practice, you should have a list of an ongoing list from the moment you own a practice of what you purchased, and it should be listed by the brand or maker, so like Zeiss, for example, and then a description of the asset, autorefractor, and then the date of purchase and the cost of the purchase, and then a note, new or used. Those are the 5 most important categories. And what a lot of people think is happening when they give, they buy something, they put it in their QuickBooks, that goes to their accountant recognizes it as an asset. They list it on what's called the depreciation schedule, and you think that there's some record of that. But when I get it, the depreciation schedule will say medical equipment, computer equipment, office equipment, and we don't know what it is. And sometimes if it's multiple pieces of equipment purchased at the same time, the accountant will just put it into one category. It won't be itemized. So and this is not, we do the analysis based on 3 years of financials, but the assets, we go back 20 years because there's still a value if they're in use. And to find an invoice of that Zeiss autorefractor that you bought 15 years ago is going to be difficult. You may not even know that was the Zeiss autorefractor because you'll just be looking at a line that says equipment. So if you have your own list, then you provide that to your appraiser and your broker, and that makes the process a lot easier. So that's another preparation you can take. Keeping electronic records of your taxes and all of the attached documents of the taxes, the W-2s, the 1099s, all of that, the Schedule E if you own the real estate. Keep electronic copies. If your accountant still sends you paper, then ask him or her for an electronic copy and keep them in a file so you can easily transmit them. These things save time. Sometimes the appraisal process can take a month or longer just because the client doesn't have the information readily available. So that's, go ahead.
Yeah, no, I was about to say, there's a lot of moving parts here, a lot of things to keep in mind. And, when you're in optometry school, they teach you all the great clinical lessons. You come out, you know how to see patients, but, when it comes to all the business stuff and you're kind of lost. So I would say that, most people don't try to tackle all of this by themselves. Of course, and I know that it usually takes a lot of teams. You talked about accountants, you talked about appraisals. So, what kind of team is best to have when you're buying or selling a practice? And obviously you probably need the help of professionals all the time, but, what kind of transaction would you say, listen, don't do this by yourself, that you're nuts. But I don't know that a lot of people try to do this on their own just because of all these moving parts. So I guess the first question is what team of professionals do you need to buy or sell a practice?
Yeah, well, you'd be surprised how many people attempt to do it on their own. That's another characteristic of optometrists. Instead of hiring the bookkeeper or the payroll company, they're trying to do it in the back office themselves. And as a consultant in the industry, that's one of the first things I'll tell my clients not to do, because you as the optometrist, you're the highest wage earner, you generate the most sales and income for that practice. So if your capacity is distracted elsewhere, you're not maximizing your revenues. You maximize revenues by spending every minute you can working and seeing patients. Hire the $15, $20 an hour employees to do those things for you. So same goes with my industry, with buying and selling practices. You absolutely need to hire an appraiser and a broker first and foremost. In this industry, they're often one and the same. So for example, my company will start by appraising the practice. We initiate the relationship as an appraiser. The seller will actually sign a contract with us to appraise the practice. They'll pay us a fee for doing it. And then we will present them with a unbiased fair market appraisal. Sometimes they're not happy with it because we're not in the business of overvaluing or overpricing practices, which some people do out there. And then if they agree with our valuation and they would like to work with us as a listing broker, we'll move forward with that relationship. And we will eventually refund their appraisal fee in the end. But it's important to us that they pay for the appraisal, because if we're about to work for them 300, 400 hours and invest in marketing the practice for sale, we need to ensure that they're ready to sell. So that's important for us to memorialize that they're ready, but also for buyers. If buyers know that they've paid for an appraisal, they know that they're ready to sell. So the appraisal is the most important part of the process because it justifies the price. The actual document is the first line of due diligence for the buyer. It's very useful in applying for financing. In fact, it can replace the need for the buyer to draft a business plan. And so it will be the primary source of information for the buyer. And then you want, in my opinion, you want that same person or firm involved in the sale because they've just done this in-depth analysis. Our appraisals are some of the most thorough in the industry, usually 90, 100 pages or more. And then I have all of that knowledge, that intimate understanding of the practice and its financials that I can then apply to the remainder of the purchase and sale process. So I can help with dealing with banks. I can help dealing with landlords and fielding buyer inquiries and facilitating their due diligence. So at minimum, a broker and an appraiser to start. The buyer then can get their own second opinion appraisal or their own team later if they feel the need to. That's up to them. And then both sides will eventually need a lawyer. It's important not to bring the lawyers in too early because they're kind of naturally geared towards pulling people apart than putting them together. So, and they're expensive. So you don't want lawyers to try to help put deals together earlier, to try to skip the step of a broker. You want to bring them in at the end, and then the broker will recommend the lawyer based on the type of transaction. And I can't stress enough how important it is to have the right attorney on board. Still, I have clients that, I'll recommend the best attorney for them, and they'll insist on using their patient or their friend or their uncle's sister, brother, whatever. And then they come in and they have no optometric transaction law experience. That's actually a field, optometric transaction law. And there's a handful of lawyers that are specialized in this industry. But if you hire a real estate attorney, they're going to bill you a lot to learn how to do it for the first time. And they're not going to know how to deal with VSP's unique insurance credentialing process. That can be a nightmare for some doctors, or the fact that there's inventory involved in an optometric practice sale, but they did a podiatrist office that doesn't have retail sales, and they're going to try to apply that to this. It just doesn't work. So you want lawyers that have worked on it plenty of times, and your broker will be able to advise. Your broker will also be able to advise on the lender, the right lender. And then you can consult your accountant when we get to the asset allocation portion of the sale, which is later down the road around the time that the lawyers get involved. So that's kind of the team that you want to get involved.
Yeah. And, obviously there's a lot of different professional services, consulting groups out there. If you're looking for one, and obviously, you have one, but, how do you tell the difference between different groups? I mean, what separates all the different options you have out there, I guess?
Yeah. So I think the key is that, this industry is lucky in that there's not many service providers out there. So, and there's not a ton of demand, so they can usually fulfill the demand that's out there. But you don't have like 50 to choose from. There's like 8. So the 8 that actually claim to specialize in optometry. So that's first and foremost. Does the company specialize in optometry? If you've got one that does dental, veterinary, and everything in between, are they really going to have the specialization to facilitate this process, understand how to value optometry practices? You know, I don't know, maybe some of them that do multiple industries have specialists within that one industry, but so look for the specialty in optometry. You want to make sure they have substantial experience. There's a lot of new consultancies coming up because they're trying to make money in this industry, but they don't necessarily have the experience. So, you know, not just a former real estate agent or even somebody with an M.B.A, somebody that has the direct experience in the industry is important. Also, in my opinion, you want to go with a small private firm. The same reason you own a private practice and you limit the number of patients you see per day to provide quality care, the same goes for a good consultant. I limit the number of listing clients and overall clients that I take on at any given time so that I can provide the quality services I'm known for. There's other groups out there that are high volume. They're affiliated with the big players that you know in this industry, the Luxotticas, Essilors, you name it, AOA even. And they're getting a lot of referrals from those networks, but they can't necessarily handle that workload. So, you know, low volume operators, in my opinion, are where it's at. I spend over 300-400 hours on every transaction. If I have 30 clients, listing clients, and then a bunch of consulting clients, there's no way I'd have enough time in the day to field buyer inquiries, to address landlords, lenders. So low volume is, in my opinion, key. And what else? Another one is you want to look at their listings page. And if you want a company that provides results, then you want to see that there's more sold listings than there are active listings. If you see a ton of active listings that are for sale, but not many are sold, then that company is obviously not achieving the task at hand. And then check out their testimonials. You know, are they actually heartfelt testimonials that you could tell are from a real person, or are they kind of one-liners? You know, so those are some suggestions, I would say.
Yeah, no, that's great. And I want to take it back because you had mentioned that I think one of the first steps, and this is, you know, in the selling process, is that one of the first steps is that you get an appraisal, I think is what you said. And so if you are a seller, how do you prepare for an appraisal? I mean, you just say, hey, you know, let's just say I'm selling and it's like, okay, well, we're going to appraise your practice. And what happens, you know?
Yeah, good question. So again, keeping good records is paramount to facilitating the process. But the appraiser will request 3 years of financial statements. A good appraiser or real appraisal should use the tax statements as the basis of their valuation. And this is an important concept I want to convey, because some out there will use profit and loss statements, which are just basically PDF files of numbers that can be generated anywhere. There's no basis behind them. There's no penalty for lying on them. So, you know, tax statements have built-in protections for the buyers or whoever's looking at them, in that they're filed by a CPA who has a license to, you know, uphold. There's penalties with the IRS, and there's you know, and there's fines. So, and there's just natural built-in protections. The seller is not going to overstate their sales on their taxes, because then they pay more in taxes, and they're not going to understate their expenses because they'll pay more in taxes. So the appraiser will request the 3 years tax statements and the profit and loss statements. Then they'll request production reports for those 3 years. If you have EMR, that's ideal, because we can produce production reports by CPT code, so we can see the array of services you're providing. Insurance provider reports, which insurance you accept, and which are the, you know, what's the split between each insurance and how much you're collecting. Accounts receivable reports will be requested. We'll look at payroll reports. We want to see the staff, how long they've worked there, what their benefit structure is, what their duties are, and how much they're paid. So W-2 statements are part of that, but that only tells us what they made in the year. It doesn't tell us about the staff, and the staff are inherently connected to the value of the practice. So there's a lot of things that will be requested. Again, much of it will be can be produced by the EMR or office management software that you have. And then if you keep your complete tax statements, those will be ideal as well. And then again, that asset list that I was mentioning before, that is critical too. And inventory. So a lot of folks that I run into don't have inventory cataloged. It's important. You should have an inventory management system if you own a practice, so you know that things aren't flying out the door or you know, missing or being over discounted. And should be able to print up an inventory report to know what's in stock at any given time. So that's also important.
Got it. So let's shift for a moment to the buyer side now. And you obviously work with buyers as well.
Yes.
So, you know, and I know there's no one thing that is, you know, there's many things as a buyer you need to look at, but, you know, let's just say, what is the number one thing as a buyer that you would say you need to be aware of? If there is a number one thing, there might not be, but.
Yeah, I think the number one consideration, the most important attribute of a practice, the page of the appraisal you want to flip to, is the owner discretionary income section. Now, there's like a billion names for this that all mean the same thing: owner discretionary income, restated net income, recast net income, owner cash flow, EBITDA, which is an acronym that stands for earnings before income tax, depreciation, and amortization. They're all kind of one and the same. And what it is what's the bottom line financials for the owner of this practice, not including a salary that they pay themselves, but working there full time. What is the owner left with after paying all direct fundamental business expenses? That line will differ wildly usually from the net income line that's stated on their taxes, because a good accountant's job is to lower your net income as much as possible to minimize your tax burden.
Right.
But in order for us to get to the true earning capability of the practice, we unravel all of those discretionary expenses. There's a lot of things called like depreciation, amortization, that are not actually cash outflows, but they bring down the net income. So part of the appraisal process is to build back up to the true net income of the owner. And that's what you want to look for as a buyer. What will I earn at this practice before considering taxes and debt and all of that as the owner? And then you want to consider those factors. So let's do a quick example. Let's say you find a practice that's grossing $600,000 and it's for sale for $400,000, and you currently make $100,000 as an optometrist. Okay. We need to figure out, is this worth it for you to buy this practice? All right. So the practice makes $200,000 in income. Okay. We have to take away the debt that you're going to have to pay the bank for buying the thing. All right. So if it's a $400,000 practice, the debt will be around $50,000 a year, let's say. So that brings your income after paying the debt down to $150,000. Now, if you get paid $100,000, that's a $50,000 raise immediately after, you know, buying the practice, which is pretty nice. What I tell buyers usually is you want a 20% or so uptick to your salary to justify the risk, leaving your cush job. You're also going to have to pay for your own benefits, so health and whatnot, and there are some tax effects. So you want there to be enough of a cushion to drive you in that direction of owning a practice at minimum. Okay, so that would be a worthwhile practice for somebody who makes $100,000. Now, one concept that I try to convey to buyers is they're often in $200,000 school loan debt nowadays or more. So they think, because I'm in that much school loan debt, let me buy a smaller practice that has a smaller price tag because I'm in so much debt. And that's where they get into trouble. So, you know, the higher the price tag, the better the practice should be performing, the more owner discretionary income there should be, the more money you have to pay the payroll person, the outsourced insurance, and instead of trying to do it in the back office yourself, and the less risk that you have. So I know it seems counterintuitive, but to buy a larger practice, if you're capable of it, is going to provide you higher income and less risk. And that's where you should be, you should be looking. So that owner discretionary income is the most important factor that I think they should be looking at.
Yeah, that is very counterintuitive, actually. That's a great point and a great tip.
Yeah. And just to quickly go off of that, if the practice grosses less than 600,000 or 550,000 seems to be the mark. Every practice is different. Gross is not a good indicator, but then the nets, the owner discretionary nets, start to fall into that range where you'll end up making less than you can make as an employed OD, and you'll have a really tough time getting approved for financing anything less than 550 gross. And there's a reason for that, because the banks don't want to risk loaning you that money and that you default on the loan because you can't afford to pay your bills. So stay away from those and go. If it's your first practice, you should look for practices that are grossing 600,000 or more.
Yeah, and I actually was going to ask you. It's funny you just mentioned that, because I was going to ask you. A lot of questions we get, and you kind of spoke on this a little bit already, is that as a new grad, there's a lot of new grads that are interested in becoming practice owners. I mean, we run a survey every year of all our users, and there's an overwhelming percentage. I want to say it's something like 60% want to be private practice owners. When we ask our users this, but a common question we get is that I'm graduating with all this student loan debt. Can I even get financing for a practice as a new graduate? So in your experience, do you think that is it possible to purchase a practice, say 1 year out of school, or should you wait several years? I mean, I know it depends on your goals, but just looking purely at a number standpoint, and just having the ability to get financing, do you find that there's a certain length of time someone should wait after graduating?
I'm a fan of going as early as possible. So you've got that 2-year restriction from the banks that you'll have to meet. Okay. And then after that, the banks don't count your school loan debt that much against your application for financing. So I've gotten plenty of buyers 2 years out of school financing. For the larger practices, you'll need a bit more time, 3 or 4 years, but it's never too early. So let me use my wife as an example. When we bought her practice, she was 4 or 5 years out of school. She was making 100, 110 with benefits a year. And she was driving, a 200,000 mile Toyota. She was living paycheck to paycheck. And she would have been doing that for the next 20, 25 years. I mean, basically living in debt to her school loans. And after we bought the practice, we bought a 700 grossing practice, very high nets, and 300,000 owner discretionary nets. Actually 250, we brought it up to like 350. But I mean, that basically tripled her income overnight before paying off the loan. And the loan was only about 60,000 a year. So she paid off her school loans in 3 years. And the net benefit to her for the term she owned the practice was a couple $1 million in close to 10 years. So if she would have sat there and waited, I don't know what the point would have been, because she just would have been that much slower in paying off her debt. I guess feeling like you have enough experience to take over a practice is, critical, but you're already a licensed optometrist. You have the familiarity. If you're buying a practice that has a specialty, that you're not familiar with, and you'll need mentorship from the owner to transition, that's a different story. But then you have the owner to mentor you. So I wouldn't be too scared about waiting because of your youth. You're already a qualified optometrist. I'd get into it as early as possible. Let me talk quickly about some other things the banks will look at. So they'll look at credit score. Obviously, 680 or above is desired. Obviously, the higher, the better. They're also going to look at your liquidity, which just means how much money do you have in the bank that is accessible now, not in a 401k, not in a portfolio of stocks, not in a money market or anything like that. It has to be like basically a checking or a savings account or a liquid money market account. And that's one thing they'll look at. So unfortunately, these days, young optometrists don't have a lot of liquidity, but they can improve their liquidity by not overspending. So banks will actually like you better as an applicant if you rent a home versus own a home. They'll like you better if you rent a car, lease a car versus own a car. I'm not trying to make your future decisions for you, but that will make you a better candidate.
Wow,
Also,
yeah.
they'll look at your production experience. So, a lot of the younger generation are seeing 25 to 30 patients a day. And you're making whoever you're working for a lot of money doing that, by the way. So if you fall in that category, then great. There's not many private practices you'll buy where the production is higher. But if you're only seeing 10 patients a day and you're trying to buy a practice that sees an average of 15 or 20 a day, the bank will count that against you. So keep all of those variables in mind as you're looking into financing. But it is not difficult at all to get financing. And again, the broker will guide you towards the best lender based on the practice and the applicant.
Yeah, thanks for sharing all that. And I was gonna, then another question that pops up a lot, and I guess there's two questions here. One question I think is very easy to answer, and that is, when it comes to buying a practice and what practices sell for, I'd say, to whether or not a practice is fairly valued is easy enough. You just need to work with a professional, like yourself, and have that information available to you by working with a group like you, let's say. But on average, what are practices selling for? I know when I was in school, they told us that I think there's like different formulas, but I want to say it might have been like some percentage of the gross, but
Yeah.
Gross is always a tricky thing too. I don't know if there's just a general rule of thumb, but
yeah, it's a question I get asked all the time, and one I hate to answer simply because that 100-page appraisal report we do is all leading up to the value. So to shrink the 100 pages down into a one-sentence answer is always hard. But as long as people know that these quick ratios or multipliers that people give are really just very arbitrary ways of kind of getting an idea, then that's fine. If they rely on it, then there's a problem there. So I recently wrote an article in Review of Optometric Business on this. I can't remember the name, but you could just look up my crazy last name and you'll find it pretty quickly. And it talks about a lot of this. In that article, I used two examples based on real life examples. One practice was had a gross revenue of 1.4 million, and another had gross revenue of 400,000. And the $400,000 practice was actually worth more than the $1.4 million practice. So that gives you an idea how unreliable gross is. But if the practice is between 600 and 900,000 gross, and they have an industry standard margin, which is the profitability of the practice, around 30 to 35%, and a relatively even distribution of assets, meaning not too many are old, not too many are young, there's a good distribution, then you can safely say that the practice value will fall in the range of 65 to 85% of gross. Now, asset value is a big part of what you're buying. One practice may have a lot of high-end inventory. Their inventory could be worth 150,000, whereas the normal primary care practice is worth about 50,000 in wholesale value. So that's a big differentiator. The age of equipment is important. When the last remodel was done, very important. Not only do we value what those are worth now, but it's also important to the buyer, because if there's, let's say the last remodel was 18 years ago, they're going to need to spend money to remodel again. So if they look at the cheaper price practice that needs a remodel, they should factor those things into their assessment. Those things will be factored into the appraisal. The price will be valued according to the age of those assets, but that's also where the appraiser or the broker come in handy. They can help you plan for what's called capital expenditures in the future. So if you're using gross, 65 to 85, if the range falls between 6 and 900,000. And then actually, it's also counterintuitive, but the ratio may fall off a little bit for higher priced, higher grossing practices, simply because there's less demand for them. And so buyers who buy them are getting a little bit of a discount, which is another reason why it's good for buyers to go in that direction.
Wow.
There's a few other methodologies that are a lot more reliable, but you'll need to do an in-depth analysis to get there. So that's a quick way to do it.
Yeah, absolutely. So let's say that I've decided I want to buy a practice, and I'm going to, I want to work with you. And what, as a buyer, should I have prepared, or do I need to prepare anything before I, before I contact you and say, hey, I'm interested in buying a practice. Let's do this. Do I need to prepare certain things ahead of time, or what should I have ahead of time prepared?
Yeah. So usually if a buyer is contacting us, it's because they found a practice that we don't have listed for sale and they need help with it. Okay. So first, buyers should get out there and start searching on their own. They'll look at companies like mine on the listing pages of our websites, and you can just do a simple Google search, optometry practice for sale, Texas, or wherever you're looking. And then, in my opinion, you want to find practices that are represented by brokers and then have appraisals, because those are the two built-in levels of assurance I talked about earlier that you have as a buyer. So you're not going to waste your time or money vetting that opportunity. So you find the practice, you inquire about it. The broker representing it will send you a confidentiality agreement that you'll have to sign, agreeing that you won't share any of the sensitive information they're about to share with you. Sign that, and then you'll get the information. If the appraisal is put together well, you should be able to read through it and, make your own initial decisions. Are you interested? Do you want to go check it out, make a site visit? You can go through those steps on your own. And then when it comes time to, okay, I'm really interested, I want to consider making an offer, then you may want to call a company like mine for support, for a second opinion on the appraisal, or facilitation through the remaining phases of the transaction. So preparation wise, you just need your curiosity and your will and your due diligence that you're going to do in the beginning, and then eventually you'll want to get people on board. Sometimes buyers will just use the broker that's hired and paid for by the seller. Sometimes they'll bring in their own consultant. That'll be up to them, and also the listing broker, how good they are and their reputation for supporting both sides of the transaction.
Yeah, got it. A question just came in, and Andrew asks, and I know you've spoken a little bit earlier, but Andrew asks, how long or how quickly after graduation should a new OD look into buying a practice? And I think you had mentioned that it's never too early to start. You should start early if that's what you want to do, but there's usually a 2-year waiting period just in terms of financing. So, just let's get some confirmation on that. I don't want to steer him wrong.
Yeah, 2 years or 1 year and 1 year residency. But again, it's never too early. So you can start looking, just perusing the marketplace will build your learning curve on what's available out there. It's not like real estate. There are very few opportunities out there, very few good ones. And so just that alone, getting familiar with the market, will set you up for, moving. Every time I sell a practice, there's always, there's one buyer, and there's always a bunch of really disappointed buyers that didn't act quick enough, didn't, make the site visit or perform their due diligence quick enough. And then they're back to the drawing board. For my wife and I, it took us 2 years to find a practice, and we were willing to move to 7 states. So, that gives you kind of a reflection of how long it might take to look. So if you start after graduation, you may not actually land on one until you've already met that requirement. A lot of brokers may not share with you the financials or the appraisal if you're not qualified to buy. So you may not get that in-depth information, but at least just looking at the market, getting some basic information, reading some of the articles like the ones that I've written or anybody else on the topic will get you prepped. And then another thing you should do when you start working, if you're working at a private practice, is, ask the owner, can I start looking at my production figures? Can I start looking at the profit and loss statements or the sales figures? And understanding how you fit into that practice, that'll show the owner that you have the gumption to actually own a practice, and then they may offer you an option to buy in as a partner or to buy them out. That might be your first and best option. So, also it's good to track where the practice was before you started and where it is down the road when you may be wanting to make an offer to buy into the practice, because then you can actually track the goodwill value you've contributed to the practice and potentially get a little bit of a discount or a considerable discount on the price that you're offered by the seller, because you inherently are connected to part of its value. So getting in with your employer is also important too.
Yeah, and another question popped in, and do you have any particular recommendations on just, maybe starting steps to finding a practice? And, that's probably difficult to answer because it might just be all dependent upon what your primary goals are and what you envision your future and maybe your practice to be. But I think maybe one thing, like you said, would be, don't particularly look at maybe practices that are small, very small. Like you said, there's that whole counterintuitive thing about looking at practices that are very small. Maybe try to target something that's a little bigger.
Yeah.
Like you were speaking about earlier.
Yeah. So, I mean, just to start the search, put down on paper where you're willing to live, the areas you want to live and why. You can also, this is a question I ask all the time, is what are your drivers as a person? Are you driven by money and income? Are you driven by, lifestyle, hobbies? And that will help you figure out what kind of practice you want. If lifestyle and maybe a low patient workload are, is what you envision yourself, then you'll look for a practice that's in a location where you can live the lifestyle you want. You don't need to necessarily see 30 patients a day. And so figure out who you are as a person and what you want. And then once you kind of have that idea in mind, then just start searching. So one way to do this is do a Google search, optometry practice broker, right? And then, the 8 to whatever companies will come up, like mine, and go to their listings page. And you can set up Google in a way that will notify you if anything changes on those pages. For our company, if you want to be pinged for any new listings, just sign on to our LinkedIn or Facebook page. And we don't really do any other marketing on those except when there's a new listing. So you won't get bombarded with notifications from us anyways. And then you'll get pinged. So, okay, in this new practice, we just listed one in Washington, D.C. Is that of interest to me? Maybe not. Maybe I'll just look at the details for now. And then you'll start to get an idea of what's out there. And then you can compare and contrast that with those personal ideals that you want to achieve. The other Google search is optometry practice for sale. Start clicking on the ones that come up in the states that you're looking, and that will lead you to the brokers that are listing them. You will find for sale by owner listings, but again, I wouldn't approach those because there's probably a reason they don't have a broker involved, and you don't want to spend money to find that out. If it's a successful practice, they're not going to take a shortcut and not hire the right team of professionals. So I hope I answered the question. I hope that helps get people started. And then if anybody ever wants to call me for pointers, whether it's a seller or a buyer, it's tax filing time now, so it's the busiest time of year, but I always try to respond, to any inquiries just to lead you in the right direction, so feel free to reach out to me.
Yeah, great. And just really one last question here for you, and that is, what are some of the most common reasons things go wrong? And that might just, be, who knows, maybe the buyer's not motivated, maybe the seller's not as motivated as you thought. I mean, is there any hiccups? Maybe it's financing.
Yeah. I mean, there's a lot that can go wrong. There's so many moving parts, like you said before. I'll list some of the common ones here, and then, hopefully people won't have to find out the hard way. But it goes back to saying, when you have the right team involved, you're going to avoid a lot of these obstacles or address them well in advance so they don't become deal breakers. And then what you said, this is something I hear all the time. Buyer finds a practice for sale by owner. They vet it. They may even have somebody look at the appraisal. They sign an offer with them. and then they get to near the closing, and the seller suddenly says, well, I need you to employ me 2 days a week. I'm not ready to fully retire. I need $700 a day. I want to keep my office in the back. And that's, usually an impossible situation because the bank will need the buyer to take over the full-time hours of the seller. So unless there's another doctor working there, there won't be capacity for that to be shared. So, and there's so many examples like that with for sale by owner that just change their mind towards the end. If it's listed with a broker, they won't have the ability to change their mind like that because they've signed a listing agreement with the broker. But other things that can go wrong are, working with the wrong lenders, working with the wrong lawyers, as I brought up before. One problem that we tend to, we run into sometimes is with the landlord. The landlord, if it's a leased property, there will be an existing lease in effect, and we'll need to assign that lease over to the buyer. So depending on how the lease is written and how the lease assignment clause is written, there's a right time and method to approach the landlord. It's a very sensitive topic, and you need your broker and your attorney to handle this in the right manner, because if it's not, the landlord you could spend months getting through the appraisal review, due diligence, financing approved, everything. And now all that's left at the end is the lease assignment and the signing of the final purchase agreement, the binding agreement. And if the landlord becomes a pain in the butt, they could just say, we don't approve this new tenant, and then the deal will fall apart. I've had some landlords that feel that they're entitled to a portion of the sale proceeds when they find out that practice is being sold. They shouldn't be entitled to it, but sometimes the way the lease is written, they could make that claim. So landlords can be an issue. Other things, the practice has to maintain usual and historic norms for sales. So if there's what's called a material adverse change, the sales dip a little bit between when we appraise the practice and when it sells, that could be a problem for banks. If buyer's financial profile changes, I had one time where the buyer, everything was set, and the buyer went out and bought a house in between the offer being accepted and the closing, and that completely changed their financial profile. So, it's relying on the third-party professionals that you hire. They should be able to walk you through everything, and using them for advice and coaching along all these phases of the purchase and sale process.
Yeah, and actually another question just popped in. So
Sure.
I got another one for you, and this one might be more, maybe more of a credentialing sort of question. I don't know if you've got any insight into this, but the question is, when buying a practice that will go under a new tax ID, what does that look like when applying for Medicare, like a time frame and ability to continue seeing patients? So
yeah,
I don't know if you have insight into that.
I do. Yeah, it's one of the most controversial topics, especially when we get to the legal phase. So ideally, and this is the way it should be, there should be seamless continuity in patient care. The issue with some of the insurances is that the buyer will not be able to get fully credentialed before the closing takes place. With VSP, they'll definitely not be able to, and with Medicare, they won't. Medicare, they will retroactively reimburse you for those patients you've seen prior to getting credentialed. VSP, and that usually takes about 30 days or so after the closing has taken place. VSP is a problem because they don't allow two group NPIs to exist at the same address. So they have to wait until the practice is sold, and you can furnish a bill of sale to prove that the new owner, the new business entity, is the only entity that's going to be treating VSP patients at that location. So they say up to 90 days, but it varies. We've seen them have a much quicker response time lately than they have in the past. And so what will have to happen is the seller will have to allow the buyer to submit under their group NPI for potentially a couple of insurances. And that is tricky in the way that it's written or not written into the purchase and sale agreement. And that's something that's, it's complex and it's beyond the scope of what I could talk about right now. But it's possible to be seamless, and another reason that kind of reinforces why having the right professionals involved so that that doesn't become a problem. Because if the buyer can't see 40%, 50% of the patient load right after they buy the practice, they're not going to end up closing on it because they need that income to pay off their loans and cover the business expenses.
Yeah, very, very complicated. But
Yeah.
I think what we'll have to do, well, that's all the questions for now. But I think what we'll have to do is set up a time to do this again sometime in the near future, because I feel like this is a topic that we could talk about for hours and hours
Days,
and hours.
yeah.
Yeah, forget hours, days and weeks. But Kyle says thank you, by the way, for answering the question.
You're welcome, Kyle. Glad you got something out of it.
Yeah, definitely. So I know that a lot of people are going to be watching this, obviously, later on. And one more time, if anyone has any questions or wants to get in contact with you, whether they're selling a practice or considering buying a practice, once again, why don't you leave us with your contact information? I know we have it at the beginning of the video, but just in case they tune in, somewhere in between.
Sure, yeah. It's visionarypracticegroup.com. My email is ERIK, F as in Frank, at visionarypracticegroup.com. And the phone number is 877-268-8881. And my direct extension is 700.
Yeah, and we'll also put that in the description of the video, so you'll be able to find it there for anyone who is watching. So thanks for joining us, Erik.
Yeah, my pleasure.
A lot of great information. We appreciate you taking the time out of your day to do this. And like I said, we'll have to do this again sometime.
Definitely. Thanks, everyone.
Have a good one.
Take care.
Bye.